Jeff, good to see you. We are diving into the headlines today. A new tax bill includes a $1,000 baby bonus in Trump accounts. We're going to break down who's eligible. So President Trump's big, beautiful tax bill includes a new savings account for children that comes with a $1,000 deposit from the federal government. Who's eligible and how will they receive this money?
Hi, Erin. That's it. So I'm excited now because I'm a grandparent. I've got a
Yeah.
grandson now, and so a couple of months old, and it's always fun. So it gets you thinking about these accounts for that
Yes.
purpose, especially. But the rules for this, for every U.S. citizen child born between January 1st, 2025 and December 31st, 2028, they're eligible for this one-time federal contribution. And it's set up primarily through the tax return. When you file a tax return, the parents will file a form 4547. That gives information on the grandchild, birth date, social security number, and such, and that will automatically set up the fund for this $1,000 seed contribution. There's also a website, trumpaccounts.gov, and so you can set up the account there as well. But again, it's limited to $1,000 per child for this account. But also, any U.S. child under age 18 with a valid social security number is eligible for someone to make additional contributions into the account on their behalf.
Right. So who can contribute to these accounts?
The federal government, they're doing the initial seed money, this $1,000 seed money for any child born in 2025 through 2028. But starting in July of 2026, parents and grandparents and guardians can make additional contributions up to $5,000 in total per year up until the child turns age 18. But also employers and nonprofits can make contributions as well. So the billionaire, Michael Dell, pledged a $6 billion amount that's supposed to go to low-income families and for children that weren't eligible for that initial $1,000 seed money. They can get an extra $250 per child.
And how will these accounts be invested?
So these Trump accounts are supposed to be invested in a low-cost U.S. equity stock fund. So that would be in mutual funds or exchange-traded funds that are going to be like a S&P 500 index fund or a similar type of U.S. Type of index fund. Again, these accounts, once the child turns age 18, they're going to be converted automatically into a traditional IRA account. So they're going to have a cost basis, and then they're going to have a portion that's going to be related to gain as well.
So earnings in Trump accounts grow tax deferred and qualified withdrawals are taxed at long-term capital gains rate. So how do these stack up against other tax advantage savings plans?
Because of the limitations of these accounts, there's probably better options for investing for your child's future.
Okay.
These are designed for long-term savings for children, so it restricts any type of distribution before age 18. But then any distribution before age 59 and a half is going to be subject to taxes and perhaps a penalty as well, unless the funds are used for qualified purposes, for higher education or for first-time home buyers. But then they're still taxed. They could be taxed at a favorable capital gains rate, but they're still taxed for those purposes.
Okay. So then I just want to ask, when does it make sense to contribute to those accounts versus contributing to a 529 or a regular custodial account?
Well, I think the 529 plans are clearly superior for educational purposes.
Okay.
You receive a state tax deduction for contributions into those plans in most states. And then any distributions that are used for educational purposes are completely tax-free versus being taxed at capital gains rates. For distributions under age 59 and a half, I think the custodial accounts are better as well. Again, they're not going to be subject to the 10% penalty or taxation at ordinary rates. So those make more sense if the funds are going to be used after age 18. But again, with my grandson now, we're certainly not going to turn down the free $1,000 contribution, but we don't have any plans to make additional contributions right now unless something changes where it makes more sense to do that.
Yeah, so exciting for you and your family, Jeff. I'm so happy for you. And it also just kind of underscores the fact that I know you're always thinking about the whole family when you're helping your clients. So if somebody wants to talk to you more about how they can best set up their children or their grandchildren for financial success, what's the best way to reach you?
Yep, absolutely. They can give a call to our office. It's 405-681-9633, or go onto our website, gortonfinancial.com. We're always available and glad to help for that.
Great. Jeff, thanks so much for your time today. I appreciate it.
Right. Thank you, Erin.